It only matters now because there was an election. If this was a year from now, like ago, I'm telling you, these things get denied. The SAB vote gets rejected. I'm telling you, election year is this sort of governing force right now, and it wasn't there earlier.
Hey everyone, this episode is brought to you by Avalanche. Everyone's favorite red coin is a fan of On the Margin, and we are a fan of Avalanche as well. Talked about it on the program before. Avalanche has a very cool solution. Their subnets allow for a very scalable blockchain that's also interoperable at the same time. And it's not just me. The institutions are noticing and they're building on the evergreen subnets as well. You're going to be hearing all about some of those institutions later in the episode. For now, Avalanche, thanks for making this possible. Hey everyone, this episode is brought to you by Mantra, the security-first, compliance-focused L1, which is onboarding the next wave of financial institutions. You're going to be hearing all about them later in the show, but for now, Mantra, thanks for making this episode possible. All right, everyone, welcome back to another episode of On the Margin. Today, I'm joined by James Seyffart. We're going to be joined by Eric Balchunas in a couple of seconds here to unite the duo of the Bloomberg boys. And we are speaking the day after that the Ethereum ETF got approved. So, James, I guess just what's the week been like, man? This must have been absolutely nuts for you.
Yeah, I mean, it kind of Monday started off with a little bit of a bang with this. I think it was the Sunshine news. Sunshine was stepping down, CEO of Grayscale. Marty Gruenberg, it looked like he was going to be stepping down. And I was like, oh, okay. But I didn't. And then things really took a turn in the afternoon on Monday when we started hearing chatter that these things were going to be approved. And that's obviously when Eric put out that tweet. We spent 30 minutes on the phone, like debating exactly how to word that tweet because we knew it was going to have a market impact. And it was just kind of wild. So here we are.
It certainly did. It certainly did. And I know we've got a limited amount of time here. So I want to actually, maybe we can spend a pretty small amount of time actually just mechanically covering what happened with the 19Bs that got approved and what that really means. Eric, welcome, my friend. Thank you for joining us. Oh, no problem. No problem. So maybe we could just go through like mechanically what exactly happened and then spend some time unpacking the implications and try to get a sense of even just like how much demand there's going to be for this ETF. But can you just give us the quick rundown of what happened on that Monday and what made you up the odds from 25 to 75%?
Yeah. So let's be clear here. Everyone that we talk to, I have people that I talk to frequently. Eric has people that he talks to that there's like a Venn diagram. There's some people overlapping the middle that are like involved in the space or tangentially aware of what's going on because they know different people involved. And nothing we were hearing for months indicated that approval was going to happen, right? Like this was everything we were hearing was it's not going to happen. And that all changed on Monday afternoon. We started hearing like chatter from different people, like something's happening. This is crazy. And so naturally we reached out to like everyone we could think of, and not a single person really came back to us and said no. We didn't get responses from some people. Some people just kind of said, yeah, it's happening. So that's when Eric and I got on the phone and like basically figured out like, what do we do here? And that's when he put out that tweet that sent the market going crazy. So obviously our view is that was a political shift. It was a shift in DC, whether it was the Biden admin or higher ups in the Democratic Party. It doesn't really matter. As far as we're concerned, this was a shift politically. You can see that with a lot of the votes that just happened in DC, Trump going pro crypto. Mechanically, what does this mean? A 19B4 is just a rule change. It's basically the exchanges filing to the SEC saying, we want to change this rule to allow us to do something. In the case of the Bitcoin ETFs, it was, we want to be able to trade Bitcoin ETFs on our exchanges. In the case of this, it's we want to be able to trade Ethereum ETFs on our exchanges, and that's all there is to it. There's some other steps before these ETFs have to be fully approved by the SEC. There's another division at the SEC that has to sign off. That's a matter of when, not if, as far as we're concerned. And yeah, that's where we sit right now.
So what do you guys think about the, for folks like me who are just sort of looking from the outside in on how this process happened? This seemed like an extremely atypical process, and the politics of this makes it look pretty odd, right? And my sense of how this is supposed to work is that there's supposed to be some sort of due process that's removed from politics. Maybe that's extremely naive and optimistic, right? But there's supposed to be some set of objective rules that the SEC is bound by, and there's I imagine sort of like a checklist of things that if this asset in this market checks all the boxes, then this gets approved. It seems like there was just a complete political about face. Maybe it was related to the SAB 121 vote that happened earlier this week. Same thing happened with FIT, a bunch of Democrats crossing the line to make this a bipartisan issue. I mean, is there precedent for this happening? And does it really just work like that? That there can be some sort of political shift and like just like that, the SEC just does a 180-degree pivot? I mean, it just seems bizarre to me. What do you guys think?
Yeah, no, I'll take this one. It is unusual. We cover ETFs. Look, we're used to covering like ETFs that track dividend stocks and junk bonds and Vanguard, and so we're not used to being sucked into election year politics. But that seems to be what happened here. I mean, if you're online and you're just watching the pendulum swing pretty quickly from the Dems being completely happy being anti-crypto, seeing the issue kind of slow away from them and actually mattering, where you had like moderates like Mark Cuban coming out and saying, look, you guys want Trump to win, you better not give this issue up, because these are a lot of single issue voters with this. And it's not like you gain any voters by being anti-crypto. Those people would vote for the Dems anyway, but you lose some by being so anti-crypto. And in a razor thin race, this matters. And so, yeah, I mean, again, we don't have any like smoking gun, but all the circumstantial evidence points to what James said. This was political. And I have to think that's why we didn't have votes. That's why what the comments are in the piece weren't as extensive as you'd like. And I'm sure they all, at least the Dems, held their nose to do this. I don't think they wanted to do it. And I got to say, I mean, again, if this is the case and that's exactly what happened, it is unusual. And there's a lot of innocence lost, I'd have to imagine. If you're at inside the regulation, you're like, wait, we were told all this mattered, all this legal stuff, this technical stuff, and then boom, just because we're going to lose some votes, we've got to go and do a 180. Man, it's hard not to get cynical, and that's why in the spot Bitcoin ETF race, we did definitely put politics into our calculus a bit. We also, the lawsuit in particular, was a big variable, but in the end, this stuff does matter. But I am somewhat, again, it's also head spinning, to go from like I said, within 1 week, I mean, I would have been lower than James at 25. I would have been like, slim to none. And then to go to it's happening, that's why the price moved. And I think in Bitcoin's case, when we had these incremental bits of good news, nothing much happened. It was like we were inching our way to what we thought we were going to have, which was approval. This was like, it's not happening, it's happening. And just again, it's everything is so, like I said, when you go into a crypto world, it's like riding a roller coaster blindfolded. It was just surprising and like nothing I've ever seen.
Yeah, I would quickly say, like, as you hinted at in your question, like, this is not how things are supposed to be done. The politics of it is like setting what's important and setting the agenda. It shouldn't really be the politics of like what should and shouldn't happen, right? So they might prioritize ESG and other things and fair disclosure, depending on like Republicans versus Dems. There's always a little bit of politics, but even for the last few years, people have been complaining about how political this has gotten, right? And let's be clear here. From my point of view, from many people's point of view, like this was like, it didn't make sense, the route that they were going down. It just logically speaking, legally speaking, like the way that they were doing things, it was like a decision was made politically and then they backed into it legally rather than the other way around, which just honestly shouldn't be the way the SEC is run, in my view. But obviously that's not the way it's being run under this administration. And this proves it more than pretty much anything.
Yeah. So moving past the politics here, because I'm in agreement with everything that you guys just said. What do you see as the demand for this ETH ETF? I know we talked about that a little bit. You guys have both been on the show. And at that time, obviously, Bitcoin had been approved, and we were wondering when or if this ETH ETF is going to be approved at all. But my sense was that you guys thought there was going to be considerably less demand for the ETH ETF. So is that still the case? And if you had to guess at sort of like relative flows or something like that, where does that? I'm sure you guys have been asked that 1,000 times this week.
Let me go first because I'll be the like downer, and then James will lift you up.
Nice.
So actually, I'm not as down as I was. I went through a lot of the numbers here. I'm a U.S. guy. I tend to spend most of my time looking at the U.S. market, and Ether futures have 11% of the assets of Bitcoin futures ETFs, and silver has about 10% of the assets of gold ETFs. That's where I was around 10%. Now, when you go to Hong Kong, Ether's 16%. Canada, it's 28%. Switzerland 28, sorry, and Sweden 37. I don't exactly know why. The ETH futures, they launched at a weird time. Maybe we just sort of ignore that, or at least if I average them together, I get to like 20, 25%. So I'm moving more up to 15 to 20% of the assets. I can't go above 20 right now, just because in my mind, there'll be a lot of 60-40 investors who are just going to be happy with Bitcoin being their crypto hot sauce. Now, Matthew Siegel was just on a Spaces I was on from Van Eck, and he's like, no, it will be lower, but ETH can be sold as like having intrinsic value. And these advisors love the intrinsic value argument. Yeah, I mean, if they can, that's tough to break through. Advisors have to re-explain this to their clients. The harder and weirder and more complex the explanation, it can be tougher for them to want it. Bitcoin is easy. It's digital gold. It's like done. So Ether, if you can make that explanation of intrinsic value and what the purpose is and why it's better or additional to Bitcoin into a sort of like something a fifth grader can understand, that's like one sentence, like digital gold. Boom. I mean, that is what Ether needs, I think, to go above anywhere above 20%. So I'm in the 15 to 20% range, but that's still pretty good. That gives you like 8, 10 billion, 12 billion, something like that. That's not bad. And relative to ETH's market cap, that's pretty good. That's a lot of bid orders relative to where you're at now.
Yeah, I mean, it's good to Eric has gotten closer to my view. I'm in the 20 to 25% camp. I think overseas, part of the problem is looking at overseas. Some of those ETFs actually allow staking. These ETFs are not going to allow staking. The other inefficiency here is the cash trade only, so you can't do in kind. So that's going to slightly dampen demand. And then the third thing is, like, when I view Bitcoin ETFs, obviously you lose some things by getting exposure to Bitcoin via an ETF. You're taking this digitally native asset and wrapping it in a TradFi wrapper that just sits there, and you have investment exposure to it. You lose a little bit more with the ETH because, one, like I said, you're not getting staking. And two, there's a lot of like digitally native things that you do with Ethereum, whether it's like DeFi exchanges, what have you. Like it's basically the currency of the decentralized financial world in doing many different things. And you can't do any of that if it's just sitting in an ETF wrapper. So my view is like ETH is 30% of the market cap of Bitcoin. It's probably going to be discounted a little bit for those reasons I just talked about. So my upper range would be these things. If it'd be really good if they get 30% of the flows that Bitcoin ETFs have. But again, like, people are acting like we're like saying we're shooting their dog by saying that there's going to be a lot less demand. But like Eric said, when he hinted at, like, even if you get 30% of the flows that Bitcoin ETFs got in their first 5 months, that's billions of dollars. Like, that's still extremely successful for pretty much any ETF launch you can imagine.
Completely. I think I'm probably somewhere in the middle, honestly, on this, because I agree with something that Eric just said, which is, what is the one-liner for ETH? I think ETH is in a little bit of I'm bullish on ETH, and I like it a lot, but I think it is in between narratives right now, and it doesn't have that snappy one-liner, which is like digital gold. And Bitcoin has this thing, it's the money printer go burr meme, it's the currency debasement. And honestly, there's a lot of legitimacy to that is happening in the real world, but it's just such an easy, simple narrative to grok. And Ethereum is this currency that this whole ecosystem around it uses. But I mean, think about how many words I just had to say to communicate that. And you have to buy into all of these other ideas as well. So yeah, I mean,
tell me how the supply schedule works in Ethereum too. Explain that to me real quick in one line.
Hey everyone, this episode is brought to you by Avalanche. Avalanche is a leading network of blockchain, which is giving access to some of the world's largest financial institutions to experiment and build on crypto rails. I'm a big fan of Avalanche. I've talked about it on this program before. The Subnet architecture leverages some of the best parts of IBC over in Cosmos, the interoperability protocol, and the rollups on Ethereum, with the result that if you're a financial institution, you can build on something that's highly interoperable, but also customizable and scalable. And it's not just me. Many of the largest institutions in the world are taking notice. And a couple examples of folks who are building on evergreen subnets include Onyx by JP Morgan. So they leveraged an evergreen subnet to explore how tokenization can revolutionize the asset and wealth management industry. Citi and the DTCC digital assets are testing private market tokenization on the Avalanche Spruce testnet with Wellington and Wisdom Tree. So again, some of the largest financial institutions in the entire world are building on Avalanche. Avalanche Evergreen provides a suite of institutional blockchain deployments, customizations, and tooling designed to address company-specific and industry-wide requirements for financial services. So join the institutional investors that are choosing Avalanche today. Go to avax.network/evergreen. Again, that's avax.network/evergreen and join the revolution. Avalanche, thanks very much for making this episode possible. Hey everyone, this episode is brought to you by Mantra, the security-first, compliance-focused L1, which is onboarding the next wave of financial institutions into Web3. So you guys have heard me talk about Larry Fink talking about tokenization. You've seen the clips on CNBC. You know that Larry and BlackRock are very, very excited about this idea. And the reason for that is they're looking at these trillions of dollars of off-chain real-world assets. They want to digitize those and bring them on-chain, which is going to be a massive opportunity. But in order to do that, they need a compliant L1, and that's where Mantra comes in. Mantra's been steadily climbing the ranks and now stands among the top 4 RWA projects on CoinGecko, which is representative of its rapid growth and influence in the tokenization space. Mantra's built using the Cosmos SDK, so they have some very cool stuff out of the box. They've got IBC interoperability. They also leverage CosmWasm smart contracts. Very cool design from an architectural standpoint. The next phase on the blockchain's testnet is Hongbai, so that's launching soon. So if you're a dApp developer or something like that, there's a lot of very cool opportunities for you. And I highly recommend that you click the link at the bottom of the show notes. That'll know that I sent you. Thanks very much again, Mantra, for making this possible. And again, guys, click the link at the bottom of the show notes. This is exactly right. And this is why I was never a huge fan of by the way, I should say I'm a huge fan of Ethereum, but I never liked this ultrasound money meme because I think it missed, even though the deflation schedule has been more net deflationary. Yeah, it's still confusing. Bitcoin is very predictable. It's like, I know what it is today. I know what it's going to be in 5 years. I know what it's going to be in 50 years. So like, that's one of the challenges. All right, let me get a sense from you guys of everyone always does this, right? We got the Bitcoin ETF. Now it looks like we're going to get the ETH ETF, and immediately people want to front run this for what is the next ETF going to be? So I would be curious, do you guys see new ETFs on the horizon anytime soon? And, do you have a sense of, like, even between the two of yourself, have you speculated on like what types of assets that's going to be? Or do you think it's not going to happen?
You want me to go first, Eric?
Sure.
I'll go first. Eric just spoke about this. I was listening to his spaces he was on, but we're largely in agreement. I mean, look, we're probably a relatively long ways out from another ETF. I mean, for a long time, I've been saying it's Bitcoin, then ETH, and then there's a gap between everything else, right? On current precedent, you need a federally regulated market before you're going to allow, like, that the SEC can surveil for them to allow an ETF to list, right? So right now you need a federally regulated futures market is the base way to do it. There are no other federally regulated digital asset futures. There's not one for Solana. There's not one for Doge, Litecoin, you name it. There are plans out there to try and launch CME. Coinbase is trying to launch some sort of CME, CFTC regulated futures. So right now, and honestly, even after they launch, you need a couple of years of them trading and prove, like you can prove that they're correlated and all these things before the SEC in this admin is going to approve them and under the current regime. That said, things could change in Congress pretty quickly. Particularly if they come out with a market structure bill over the next year and really define what's a commodity, what's a security. It clears a lot of that mess up. It would be a lot easier to launch futures if they can figure out a way to bring like a Coinbase exchange or a Kraken exchange under the exchange rules by the SEC, and then they're federally regulated there. That would speed things up. So basically, you just need some sort of regulated venue of trading these things that the SEC feels comfortable covering before they launch. That said, all of this could change and be accelerated or slowed down depending on what happens in November. That's my overall view. But I think we're probably a relatively long way out from another asset, at least a year, I would guess, probably more. But again, what happens in November, whoever's running the SEC in 2025, that might change.
Yeah, I would agree with that. Because let's say the election's over. The SEC may not be as politically vulnerable up until the election, and nothing's getting done before the election anymore because they could just punt beyond the election now at this point without seeming like negative. But if Trump wins, depends on how much he honors his, decision to be pro crypto and how liberal the SEC commissioner he picked would be. So if he's like, pretty open, it could open the floodgates, to be honest with you. In Europe, they've got all kinds of stuff. So it's possible to have a very wide array of coins in ETPs. They could use ETNs maybe down the road instead of ETFs, perhaps, to get, around some issues. But I remember that his first SEC commissioner was Jay Clayton, and he started the disapprovals or the rejections of the Bitcoin ETF. So Trump's shift, I think, is political. Everything's political. I mean, both sides are. It's all political at this point, but it depends, I guess, how much he gets into crypto for real, and if he wins, and how much he honors that. And yeah, that's a huge variable. But if Biden wins, I don't see anything else getting out, maybe for the whole rest of his second term. Because remember, it only matters now because there was an election. If this was a year from now, like ago, I'm telling you, these things get denied. The SAB vote gets rejected. I'm telling you, this is an election year. Election year is this sort of governing force right now. And it wasn't there earlier. And it won't be there in 8 months.
Say the other thing here is Solana, the SEC has no problem in all of these documents saying that Solana is security, right? ETH, they danced around, they refused to say it. They were very arbitrary in the way they looked at it. But Solana, and many others, they have no problem saying these are securities. Ones they don't say are securities that kind of de facto have commodity status are ones that are forked or based off of Bitcoin many years ago, like Litecoin, even Dogecoin. So the regulatory hurdle for getting those through to an ETF theoretically is shorter. I mean, if a Supreme Court decides that XRP itself is not a security and it's a commodity, that could happen quicker. But the problem is, like I said, no matter what, you need a regulated market that the SEC can surveil for fraud and manipulation before they're going to approve this, before they'll approve anything else. And I just don't see that happening for years.
James, I heard you just say those two assets, Litecoin and Dogecoin, a couple of times. Those are also the Blockworks internal Slack bets on the next ones as well.
There you go.
I've had a lot of, I don't know if fun is the right word, but just imagining the mainstream headlines of if we were to get a Doge ETF. I think that would really explode some brains.
Remember, all of this is building a tolerance to the general public. I mean, Bitcoin shocked them enough. Now this. And, I just compared all this to gangster rap in the late 80s. At the time, these records were wild. I mean, NWA, Eazy-E, Two Live Crew, they felt like contraband. But fast forward even 15 years after that, 10 years, it was pretty much fine. It was part of the culture. There was a section for rap. It was it just was not a big deal. So we're the sort of initial...
Ice Cube doing family movies.
Yeah.
Okay.
He's an actor now.
I know, exactly. Anyway, and someone was like, does that make Elizabeth Warren Tipper Gore? And I'm like, they do have there's some similar vibes there. I'm old enough to remember Tipper Gore. And she was on a crusade. She was very much she's almost like, we're building an anti-rap army. I mean, the vibes are very similar. I know that metaphor is not perfect, but when Vanguard banned Walmart, that's when I got started with that, because I've never seen something get banned. It's just so weird to me. And then this guy wrote this article about how it threatens all of us, and it's so good. This Spectator, it's all just very similar to something that is in the process of breaking through. So in the next year or two, once all these are out, the wow factor will become less and less. So I don't think Doge would shock now, but in a year or 2 years, it may be no biggie.
The other thing is, I would say, if I'm an issuer, I don't think we'll have as many issuers going into those. I'm not spending a couple $100,000 to launch a Litecoin ETF if I'm a big issuer. There are costs in doing these things, and how much demand is there. So I said the regulatory hurdles are probably lessened for them. But I guess it depends on how much they think money they can make on actually launching these things and going through the process of doing this. Is it worth it at the end of the tunnel? Maybe some of the more crypto native issuers like Grayscale and Bitwise would possibly think about going that route. I mean, Grayscale has some trust in that space, but I just don't see BlackRock being gung ho and launching a Litecoin or Dogecoin ETF personally. But who knows? We'll see what happens. There's no guaranteeing, but there's more than just could it theoretically happen? There's also do people want to put money on the line and risk to try and launch this? Which right now people are launching more ETFs than they know what to do with. So who knows?
Yeah, that's a really strong point. I think it's one thing for Larry Fink to get on CNBC and campaign about Bitcoin, and I assume we're going to get some sort of ETH campaign in the near future, but it's maybe another to say, the gangster rap hasn't been accepted yet, so I'm not sure if I see Larry Fink shilling Dogecoin on CNBC. I guess just to end here, super happy for the ETH community, and yeah, guys, this was a massive step forward for the entire space, but super pumped. Anyway, I know we had limited time here, guys, and I really appreciate it. I'm sure people who are listening to this will already know who the both of you are, but if they want to follow either the work that you do at Bloomberg, follow you on Twitter, what is the best way to do that?
Yeah, I mean, the best way to do it is if you have a Bloomberg terminal and you're a Bloomberg client, you can find both of us on there. That's where we do the bulk of our work. That's where we go in deep in the weeds. But both of us are very active on Twitter as well. So I'm at JSEYFF, and then I'll pass it down.
Mine is just my name. Somehow it was available. So I got lucky, I guess. But I also would say I have a podcast called Trillions, which you can find anywhere. So if you want to learn about ETFs and get into that, we've been doing it for like 8 years. There's episodes on everything. It's a good educational tool.
Yeah, highly recommend that. James, Eric, I really appreciate the both of you guys. I highly recommend that you go follow both of these guys and listen to Eric's podcast. So guys, appreciate it. We'll have to do it again sometime soon.